This is one of the most important yet overlooked aspects of forex trading, especially by beginner forex traders, and that is using the wrong time frames to execute your trades. You must understand the different time frames and how to use them to your advantage. Now, this could be what differentiates you from a consistently profitable trader or a trader that goes down a black hole of loss after loss. But guys, don't get me wrong, losses are technically not a bad thing if controlled, and you should be learning a thing or two from your mistakes. This took me so many months to finally figure out, so I'm not perfect. But if you follow along this video and practice all the strategies that I'm about to give you, then you'll not only be able to get high quality trades, but get the best entries and exit points in the market. You're gonna be making way more money than you currently are and ultimately increase your win rate. If you're interested in this video, then I'm sure you're gonna enjoy your time on this channel, so go ahead and hit the subscribe button down below, turn on your post notifications so you don't miss out when I have a new video up for you guys. I'm not gonna lie, any forex trader that knows what they're doing on the charts never trades on only one time frame. There is something called multi-time frame analysis. Multi-time frame analysis is looking at the same currency pair at different times to build a more complete picture of the market. This just allows you to have a bird's eye view of exactly what is going on the market from the highest time frames to the lowest time frame. You don't want to be entering the market blindly and not knowing exactly what is happening on the market before you take your trades. You can see exactly what price has been doing over time. This is also going to allow you to identify any alignments forming in the market. So you want to have as much alignment painted out for you before you go ahead and execute that trade. I wasn't doing multi-time frame analysis, and in my own defense, guys, I didn't even know what the heck I was looking at on the current time frame that I was on. You know how you're able to navigate the charts from moving from one time frame to another? Even that simple shift was a bit difficult for me. So if it's a challenge for you right now, I completely understand.
So what exactly are these time frames? In Forex, time frames just tells us how much time each candlestick represents. For instance, on the 5 minutes chart, one candlestick represents 5 minutes of price movement and is represented by one candlestick. On the 1 hour chart, you're gonna have 1 hour's worth of price movement, also represented by one candlestick. On the daily chart, you're going to have one candlestick representing a full day's worth of price action. It's the same with a 4 hour and any other time frame charts you're going to move on to. So let's move on to TradingView, which is our charts analysis platform. I'm going to click on Super Charts right here, and also if you don't have it yet, there's going to be a direct link to TradingView in my description box down below. This is how my chart looks. I'm going to show you guys exactly how to have your own favorite time frames so you can have easy access to them. So go on the top corner and you're going to see this arrow right here. So click on that and it's going to give you this drop down menu showing the different time frames. So all you have to do is click on the stars on the side of the particular time frames that you're going to be using on a daily basis, so you don't have to keep going back and forth. All the different time frames you see here gives you a different but in-depth perspective as to what is going on the market. You can think of it as Google Maps and you're trying to find the location of a friend. The monthly chart gives you something like the country view. The daily chart gives you a city view, and then the 15 minutes is giving you like the street view. Just as you can find a friend from your street view, you might also want to go down, which is maybe breaking it down to find maybe the house number. So that is you further dropping down to maybe the 3 minutes or the 5 minutes or maybe the 1 minute to find your entry criteria, or in this example, the house number. Even if you're scalping on the 1 minute, you still need some higher time frame context as to what is going on the market. I'm super curious. Go ahead and comment down below what time frame you use the most. Don't be shy if you're taking your entries on the monthly. Comment down below. Let's cause some commotion in the comment section. This was a trade I was analyzing on gold on the 1 minute, and as you can see, it's moved into profit beautifully. Now, this would have been my third gold sell trade for today, but I didn't take it because I was editing this video. Just as we've been discussing all through this video, gold has already been in an overall sell trend, so this initial buy move was just a correction to continue to the downside, and As you can see, there was a slight break of structure, there was a trend line. Even though we had a break of the trend line, there was also a slight retest and also a reaction off of the 50 EMA. So there was every indication of a move to the downside, if you ask me. Gold just gave us a little over 50 pips. For higher time frames, consider the monthly, weekly, daily, 4-hour and 1-hour charts. These show the overall trend and institutional bias. For lower time frames, you can consider the 15 minutes, 5 minutes, 1 minute, and these are what help to fine-tune your entries and exit points. The golden rule of trading is to trade in the direction of the higher time frame trend. If you want to counter trade the trend, you have to be careful with this and be sure not to over leverage on that trade. Even if you have a crappy entry and you're correct with your directional bias, you're gonna most likely have a good trade. But it's much more dangerous to trade against the trend because it's like you're trying to swim against a tsunami. Good luck with that. How to build alignment. Building alignment is when all the time frames agree. Doing this allows you to avoid bad trades. And here's exactly how I do it. Top-down analysis always. Start on a daily time frame. Identify the overall trend and key zones using either support and resistance or supply and demand, whichever one you use. Next, you're going to move down to the 4-hour time frame, confirm the overall trend, and then go ahead and refine your zones even more. Lastly, we're going to drop down to the 1 hour or the 15 minutes for our entry time frame. Let's look at a quick example. If the daily time frame says up, 4 hours says up, and the 15-minute confirms your bullish structure, that is what alignment means. Here, there is no confusion whatsoever. So let's quickly break down 3 time frame strategies that I use to enter and exit trades. The higher time frame for my directional bias. And here I'm looking at the daily or the 4-hour chart. Now what I'm looking for is a clear trend. And we know that there are 3 things that the market is going to do. It's either going to be trending bullish, bearish, or it's going to be consolidating. So that is what I'm looking to identify on the daily or the 4-hour, and then I'm going to identify any major zones here. Next, I'm going to move to the mid time frames. Here is where you refine your zones and place your setup. I like to use either the 1 hour or 30 minutes for this, zooming in and looking for any structural shifts. I also check the mid time frame for break of structures. Lastly, I'm going to move to the lower time frames for my entry, which is the 15 minutes, 5 minutes, or occasionally 3 minutes or 1 minute to further refine my entries. Now at this point, I like to wait for any break of structures and a retest. Once I have that, I'm going to place the trade with a tight stop loss. This just gives you a better risk to reward, but only if your higher time frames are aligned. Here are some common mistakes I highly recommend you avoid. The first one is using one time frame for everything. You don't have to do it all at once, but make sure that you are not only entering a trade based on simply the 15 minutes or the 5 minutes chart analysis. Make sure you're looking at different time frames to make sure that your directional bias and your entry criteria is aligned. Over trading. You're just stressing yourself. There's no strategy behind it. Ignoring structural shifts on the lower time frames. Waiting to get an actual confirmation before you get into the trade is what determines if you're going to be able to find a sniper entry. My last tip is trading against the higher time frame bias. Even if you want to counter trend trade, make sure that you are being as cautious as possible, because for a fact that you're trading against the trend, so just be careful not to lose your account. Your exit strategy is just as important as your entry strategy. You can look at either manually closing your trades, taking partial profits after your trade has moved into about 50% of your profit target. You can take some profits and then let the rest run. You can also move your stop loss to break even. And for this, I like to move my stop loss to my exact entry because price can pull back and I don't want it to take me out of the trade abruptly. I just want to make sure that I've calculated my risk. I'm sure of my stop loss, so I'm more comfortable with trailing my stop to my exact entry for break even. You are either moving your trades to break even or you are taking some profits. That is really important, guys. Don't wait for price to reverse and then take you out completely.
Thank you so much for watching this video up until this point. I really do hope you were able to get some value out of this video. You were able to learn a thing or two. If you did, let me know exactly what you learned in the comment section down below. I do my best to keep my trading as simple as possible. So if you want to trade with me or join my mentorship program, go ahead and check out the links in my description box down below, and I'll be available to you. And also, if you want to learn more, if you want to get more from my free content, you can go ahead and watch any of these videos on my beginner forex trader playlist, and I'll see you in my next video next week. But until then, stay safe and stay blessed.